Hello, everybody. Thank you again for a nice interview with Domenic Carosa from Banxa. Banxa is still the cheapest crypto stock on earth, but the company is doing terrific. Did a new research and update on the company, and it's evolving like it should be. It's growing. It's doing the right things, but the only thing that didn't happen is the share price. But that's normal in these circumstances in the market. So I invited Domenic for a new update on Banxa because there are some interesting things around Banxa at the moment. So thank you, Domenic, for this nice interview. Thank you for the invitation. I'll leave it to you to start with an update on how Banxa is doing the last few months.
Thank you. Thanks, Ronald. And it's great to be back on your program. There's been a lot of activity in the last couple of months, and maybe I can start with the latest announcement from last week. We engaged an investment bank called Architect Partners, who is a US-focused crypto specialist investment bank. The reason that the company and the board has engaged the IB, the investment bank, is that over the last month or so, we have had a number of approaches for acquisition. And what that basically means is we have been approached by some larger groups because they really like Banxa, and they've put to us a number of proposals with regards to a takeout. And like any good company, or particularly a public company, should do with a set of board of directors, is to engage an investment bank, is to follow a process, is to ensure that everything that we are doing, we are doing it with the eye of maximizing shareholder value. And hence we've got AP, Architect Partners, engaged, and they will be effectively running that process. I think the positive coming from here is there is definitely interest in Banxa. The proposals that we've received to date are materially higher than the current share price. That's also very, very positive. And what Architect Partners will obviously be doing is to be speaking to a broader set of potential acquirers of the company as part of their review and as part of their report to the company. Now, whether or not we end up going through that process, I think it will be ultimately a decision for the board and ultimately a decision for shareholders. But I think if you take a step back, the most important thing is that there are companies out there, global payment service providers, strategics and PE firms that are having a very close eye on Banxa and what we're doing in the space.
Yeah, because the last time we spoke spoke about how private companies are valued way more than public companies. I think the difference today is even more, because the last time I checked, Banxa had a market cap of 45 million. There are other competitors, I think, in the space, privately valued in the billions. I saw a competitor of Banxa being taken over in 2021 for 250 million. So it's 5 times market cap today. So it's normal that there is interest in companies like Banxa. And I think that's maybe for shareholders the most anxiety in investing today is it's going to get taken off the stock market way too cheap for its future value.
Yeah, I think that's a difficult question. Yeah, ultimately, at what price, if the company, if the board decides to accept a bid, what that price is. Mm-hmm. And obviously this is a decision and discussion at the board level, and then obviously anything that we would recommend would need to be put to shareholders. So shareholders would ultimately have to vote on it. Suffice to say, from a personal perspective, and I'm going to talk as a major shareholder of the company, it would need to be a fairly material increase from the current valuation. I think today we've got a market cap of around 45 million Canadian, which is about 30 million US. You rightly mentioned One of our competitors last year, called Simplex, was bought out for $250 million US. So a very, very, 7-8 times X multiple on Banxa. And frankly, I think Banxa is a much better, much stronger company than Simplex ever was. And obviously there's been some other competitors in the private space like MoonPay that ended up raising late last year at a $3.4 billion valuation. Obviously the market has changed and valuations have come down, but I think ultimately, the only way is really up from a shareholder and investor perspective. And that's why we've engaged a bank. It would be remiss of us as a company to try and do this ourselves by having a bank that has very specific expertise in the space. Will ultimately help us maximize the price. Once again, if we decide to go down that particular path, that we will put to shareholders. And just to give you some insight, Architect Partners sold DM, which was basically the offshoot of Facebook. They sold that for over 200 million, and that was basically a company, open source company with no people and just some partnerships for over 200 million US. And that was done earlier this year. That was one of the last transactions, and this is obviously in the public domain. I'm not providing any forecasts with regards to where I think the value will be. What I will say though, it's going to be higher than where we are today. I think that's categorical, and you don't need to be a genius to work that one there out.
Yeah. Okay. I think so too. So Banxa still the cheapest crypto stock on earth. I'll keep saying it because you're also going to focus on the United States. You increased your efforts to gain market share in the United States. How is that evolving, and why are you doing that?
Yeah, the US is the largest crypto market by far. It's 5 times larger than the UK. And we started the process, in fact, late last year, but we've really accelerated this year. We are effectively acquiring licenses. They're called MTLs, money transmitter licenses in the US. And we're doing this on a state-by-state basis, which allows us to effectively being able to target and provide services in the US market, which is the largest market in the world. And then obviously on our radar is a state trust charter license, which will allow us to hold custody of coins, similar to the license we have in the Netherlands with the DNB and in other countries around the world. And so what we're doing, so just to, for those that are maybe new to Banxa, Banxa is really about providing payment and regulatory infrastructure to centralized exchanges, wallets, and Web3 applications. So we provide the fiat on-ramps and the fiat off-ramps. And we all know that the crypto industry is becoming much more regulated. And when we hear this, it is actually music to our ears, because we saw that regulation was going to become increasingly more important, which is why many years ago we started acquiring our licenses. In the US, they're called MTLs. In other parts of the world, they're called VASPs, Virtual Asset Service Provider licenses. So for example, over a year ago, we received a license from the DNB for both exchange services as well as custody services. And then we have similar licenses in Australia, in Lithuania, in Canada, and now obviously we're grandfathered in Turkey and Brazil and South Africa, and we're going into all these other markets as well. So we're taking effectively the same technology stack, the model that we have. We're going and acquiring licenses, and ultimately that's the value. Ultimately, someone who acquires the company will be doing so because of the technology, the people, as well as all the licenses that we have around the world, because they're not easy to achieve. And there's obviously a big cost of acquiring them and then managing and maintaining them.
Okay, and Banxa is also one of the companies with the highest licenses for local payment providers. Like in Holland, Belgium and Holland, we can use Ideal. And that's your competitive advantage, I think, against other competitors, because everybody has the Visa, MasterCard, the big ones, Apple Pay, but not everybody has so many local payment providers on board.
And the local payment platform is really important. So, for example, you mentioned the Netherlands. Everyone knows and everyone can use Ideal in the Netherlands and Belgium, while just over 50% of people actually have a credit card. If you go to Germany, there's actually even less people that have a credit card than the Netherlands. And if you go to countries like Brazil, Turkey, South Africa, you're talking less than 10% of people actually have a credit card. So a local payment method is faster, more trusted, and cheaper from a customer perspective. And for our customers, so our B2B customers like Binance, OKX, KuCoin, Edge Wallet, the centralized exchanges and the dApps. The reason why, and this is what we're being told from a number of our customers, is that Banxa has the highest conversion rates in the industry. And that is because we not only do credit card, which is what all of our competitors do, but we do local payment methods. The conversion rates on credit card are very low globally. This is not us. This is MasterCard and Visa effectively providing the lower conversion rates. But a local payment method like Ideal or Instant SEPA or faster payments in the UK or Poly in Australia, it's fast, cheap, and instant. And that provides a high conversion rate to our customers, which is why we continue to add more and more customers every month.
Yeah, I think that's also trustworthy to have the local payments, because we got a lot of questions. For example, when we do a subscription service with recurrent fee, they can only pay with a credit card because it's recurrent. But we always get questions: can't I use Ideal for that? So it's that the people think it's trustworthy and they use it a lot, the local payments. I think it's very a competitive advantage of Banxa to go on that path. So great work on that. Maybe still a few questions, because I also saw that Banxa was cutting staff to cut costs. Is that having a good impact on the profitability of the company?
Yeah, we last quarter, the June quarter, obviously, if you take a step back, the equity markets have obviously declined. The crypto markets have obviously declined as well, and volumes have also declined in there as well. And so we saw this earlier this year. We took a proactive step in the June quarter. We cut about 30% of our team. We're saving the company over $10 million a year in costs. We've now got a very keen eye, a real focused eye on profitability. We expect profitability sometime this financial year.
Okay, but it doesn't impact the growth of Banxa?
To a degree, it does. Like, for example, we had roughly 200 people. We've got we're about 120 people now. So will it have an impact on the number of, when I say growth, just to be clear, it will have an impact on the number of licenses. So instead of going out there and acquiring 20 licenses over the next 12 to 18 months, we'll focus on acquiring 10 licenses. But what we'll do is we'll prioritize. So, for example, this is why the US is so important. The US is the #1 market. So if we have limited resource or less resource than we had earlier, what do? You focus on the markets that are going to have, as I say, the biggest bang for buck, the biggest ROI. The US is one of those markets that will give us the biggest bang for buck ROI. And so what it just means is some of the smaller long tail markets, so some of the smaller countries in Europe, some of the smaller Asian countries, or some of the smaller LATAM countries, we'll just have to do them next financial year as opposed to doing it this financial year.
That's a nice strategy. Yeah, it's great to hear you're doing the right things in this crypto winter. So Banxa is gonna sky high in the next crypto summer. Thank you very much, Domenic. I'm looking forward to the results at the end of this month, I think. Thank you very much for your explanation on how things are going with the company. It's going great for me, and still I'm going to replicate it. Banxa is the cheapest crypto stock on earth. So thank you very much, Domenic, and hope to see you next time.
Thank you very much for having me. Thank you, Ronald.
Okay, have a nice day.